Okay, let's unpack this. Imagine a world where making informed investment decisions is getting faster, smarter, and, well, incredibly more accessible. That's exactly the revolutionary shift we're diving into today. The global stock analysis software market. Our mission for this deep dive is to really distill the most important nuggets of knowledge from the Global Stock Analysis Software Market Forecast 2025-2033 report. This one's powered by cognitive market research, and we're going beyond just the figures. We want to understand the currents driving this market, what tech's gaining traction, and which regions are truly accelerating. This isn't just about financial tools, it's about a critical technology reshaping how you and countless others interact with financial data.
Absolutely. And what's truly compelling here, I think, is that stock analysis software isn't solely the domain of institutional investors or, Wall Street titans anymore. It really embodies a significant broader trend, the democratization of access to sophisticated financial information. It's empowering a far wider range of individuals, smaller firms too. This report gives us an invaluable roadmap. It shows not just what growth is happening, but maybe more importantly, why it's accelerating and what specific factors are fueling this expansion across different parts of the world. So you're going to get a shortcut, essentially, to understanding the key market drivers, those unexpected regional hotspots, and just the sheer magnitude of this industry's transformation.
Absolutely, and magnitude is the right word. We are talking about a market on the verge of, well, explosive growth. Let's start with the big picture then. The global numbers tell a really compelling story. So back in 2021, the global stock analysis software market, it generated sales revenue just shy of $1 billion. $948 million specifically. Now, here's where it gets truly interesting. By 2025, that figure is projected to surge to over $1.5 billion.
Wow, $1.5 billion?
Yeah, think about that. It's nearly doubling in just 4 years. And if you look further out to 2033, the forecast is even more staggering. It's expected to more than double again, reaching an impressive $3.896 billion.
Price almost $4 billion.
Exactly. The overall compound annual growth rate, or AGR, for this market is a very robust 12.5%. That's a significant, consistent growth rate. So what does a sustained double-digit CAGR like that actually signify for a market that's, moving from millions to billions? What's the underlying message here?
Well, that 12.5% CAGR, especially when you apply it to a market already nudging $1 billion, it sends a really clear signal. This isn't just a fleeting trend or some temporary spike. Not at all. It indicates robust, deeply embedded and sustained demand. We're witnessing a fundamental shift, I think. A pervasive reliance on data-driven decisions becoming the norm across the entire investment landscape. We're talking individual traders right up to large asset managers, everyone. So that rapid leap from hundreds of millions to nearly $4 billion by 2033, it isn't just growth, it's a fundamental transformation. By then, we're not just looking at a successful niche market, we're talking about a multi-billion-dollar industry that's become absolutely central to how modern finance operates. It suggests that accessing and crucially interpreting complex financial data is now an indispensable competitive edge.
Indispensable competitive edge? Yeah, that really puts it into perspective. And it's not just about the global numbers either. The regional breakdown reveals some fascinating dynamics. You might have some assumptions about who's leading, sure, but there are some truly unexpected shifts happening. Let's start in North America, a region often seen as, well, a bellwether for financial technology. Here, the market was valued at around $195 million back in 2021. It's on track to more than triple, hitting nearly $777 million by 2033. And that's maintaining a strong average annual growth rate of over 12%. Solid growth.
Pretty consistent with the global average then.
Right. Now, within North America, the United States, as you might predict, accounts for the lion's share. It's projected to reach over $600 million by 2033. Big market. But here's a subtle yet telling detail. While the U.S. is large, countries like Canada and Mexico are showing even faster growth rates. Canada's growing at over 13.4% annually, and Mexico is surging ahead with a CAGR of more than 13.5%. So what's behind this comparatively stronger acceleration in Canada and Mexico, even as the U.S. market keeps climbing steadily?
Yeah, that's a great observation. A key insight here is that while the sheer volume, the size of the U.S. market, will definitely remain dominant, those higher growth rates in Canada and Mexico point to a very exciting trend. It's the expanding adoption in what we might call emerging North American economies, relatively speaking. For Canada, it could be tied to a highly tech-savvy population, maybe combined with strong government-supported digital infrastructure. That often fosters a vibrant fintech ecosystem. For Mexico, it's likely a blend of things. Increasing digital literacy, definitely, a rapidly growing middle class, and perhaps a younger, more mobile-first investor demographic. People eager to access these tools. So it's not just about the established financial centers anymore. It's about broadening access,
and sophisticated local innovation, too.
That's a great point about local innovation and demographics. Makes sense. So is this trend, stronger growth in developing economies within a region? Is that something we see elsewhere? Let's pivot across the Atlantic. Let's look at Europe. This market recorded around $215 million in 2021, and it's expected to more than triple to nearly $845 million by 2033, reflecting a respectable CGR of just over 12%. Again, pretty solid.
Okay, so similar overall growth to North America.
Exactly. And we see solid contributions from the economic powerhouses like Germany and the UK. Both are growing in that 12% to 12.8% range. But what truly stands out here, and this might surprise you, is that the rest of that category collectively shows the highest regional CGR within Europe, hitting over 13.5%.
Over 13.5% for the rest of Europe. That is interesting.
Right. So what's driving this particularly dynamic growth outside the traditional financial hubs like London or Frankfurt?
Yeah, that raises an important question, doesn't it? Why is rest of Europe growing so rapidly? It really hints at significant adoption, perhaps less centralized, happening across numerous smaller markets and economies. Think about the fragmentation of European financial markets historically. This might actually mean smaller fintech companies can find niches more easily, maybe scale regionally. They could be leveraging accessible pan-European platforms or national initiatives pushing digital literacy. It suggests a widespread shift towards these digital investment tools, even beyond the big centers. A broader base of investors across really diverse economies are seeking that competitive edge through technology.
A broader base indeed. Okay, from Europe, let's travel east to Asia Pacific, which the report highlights as an absolute powerhouse for growth, and the numbers back that up. This region already accounted for the largest slice of the global pie back in 2021 at nearly $380 million. And it's projected to skyrocket, that's the word they use, to over $1.5 billion by 2033. $1.5 billion, so overtaking North America and Europe combined, potentially.
Well, significantly larger than either individually by 2033, yeah. Driven by a strong TLER of almost 12.4%. This is a huge market in absolute terms. Now, within Asia-Pacific, China is undeniably leading the way in sheer market size, forecast to reach over $616 million by 2033. India is surging forward, too. Remarkable adoption rates there, expected to grow at over 13.1% annually.
Strong momentum in India.
Definitely. But the real standout for you here might be Taiwan. It shows exceptional growth, moving from about $11.7 million in 2021, point to over $55 million by 2033. And get this, the highest EGR in the entire region at a staggering 14.06%.
Wow, over 14% for Taiwan. That's seriously impressive.
It really is. How do we explain Taiwan's particularly impressive trajectory?
Well, going on for just a second, Asia-Pacific's overall path really underscores the immense financial innovation happening and the investor engagement across these diverse markets. China's growth, that's a reflection of its vast digital economy, its increasingly sophisticated investor base. India, you've got this massive, young, digitally native population. They're kind of leapfrogging traditional financial services, going straight into advanced digital tools. And Taiwan.
Yeah, that leading KGR of over 14%. It isn't just about being tech-savvy, though they certainly are. It could very well be a ripple effect, maybe, from the island's booming semiconductor and technology industries, creating a wealthy and highly informed investor class that's eager to leverage advanced tools, plus perhaps a cultural openness to digital innovation. It's a clear indicator, I think, of how technological readiness translates directly into rapid market expansion.
That connection to the tech industry in Taiwan is a fascinating point. Makes a lot of sense. Okay, from one powerhouse region, let's now turn to South America. Here, the market was valued at around $54 million in 2021 and is projected to grow steadily, reaching over $207 million by 2033, with a respectable, consistent CAGR of almost 11.85%.
Okay, so steady growth. Slightly below the global average, but still consistent.
Right. Brazil leads the charge, forecast to reach over $95 million by 2033, while Argentina also shows strong movement, growing at over 12.2% annually. What does this consistent, if maybe slightly less explosive growth, tell us about the adoption of stock analysis software in South America?
Well, while its regional KGR, yeah, it's slightly lower than some other regions we've discussed. The consistent growth across major economies like Brazil and Argentina signifies a steady integration, perhaps more measured. These tools are becoming part of their financial ecosystems. This points more towards a maturing adoption cycle rather than a completely nascent one. It suggests that more and more investors are realizing the benefits of structured data analysis, even in markets that have, historically faced greater economic volatility. It seems like it's about building a robust financial infrastructure, piece by piece, rather than maybe a sudden digital explosion like we see elsewhere.
That idea of a maturing cycle, yeah, that makes sense. It's steady integration. Now, let's shift our focus to the Middle East, which the report indicates is also witnessing, and I quote, robust adoption. This market was valued at nearly $55 million in 2021, and it's expected to more than quadruple to almost $250 million by 2033, showcasing a strong CAGR of over 13.2%.
Quadruple, that's significant growth. And a CAGR above 13%.
It is, and we see remarkable growth in countries like the UAE. That's growing at nearly 13.8% annually. And Qatar, also strong, with a CAGR of over 13.4%. But just like in Europe, there's another interesting surprise here. The rest of the Middle East category actually has the highest CDR in the entire region at an impressive 14.56%.
Wow, okay, so again, the rest of category leads. What's going on there?
Exactly. What might explain this rapid acceleration across the broader Middle East, particularly outside its most prominent financial centers like Dubai or Doha?
Yeah, a key insight here has to be the exceptionally high growth across the whole Middle East, but particularly in the UAE and Qatar. This clearly reflects a significant strategic push. Economic diversification away from traditional oil revenues, definitely, and an aggressive drive toward digitalization across the region. You look at national visions, like Saudi Arabia's Vision 2030. They're heavily investing in technology, fostering digital economies. And financial technology, fintech, plays a crucial role in modernizing markets and attracting foreign investment. Now, the fact that the rest of the Middle East is leading with that 14.56% CAGR, it suggests a broad embrace of these tools. Perhaps as smaller economies strive for similar modernization and competitiveness. It points to a wide adoption extending far beyond just the most prominent financial hubs.
That's a powerful trend, that link between diversification, digitalization, and fintech adoption. Okay, finally, let's talk about Africa, which the report unequivocally highlights as the fastest growing region in this market, period. The stock analysis software market in Africa, starting from a comparatively smaller base, yes, around $49 million in 2021, is expected to nearly double to over $90 million by 2025, and then truly skyrocket, as the report puts it, to almost $280 million by 2033.
Skyrocket.
Okay, and it holds the highest regional CGR of all the regions we've covered, an incredible 15.15%.
15% CAGR for the whole region. That is phenomenal growth.
It really is. And within Africa, the individual country growth rates are genuinely astonishing. And Nigeria is forecast to reach over $135 million by 2033. That's growing at a whopping 15.57% CAGR. But even more impressive, get this, South Africa. It contributed nearly $18 million in 2021, expected to grow to almost $110 million by 2033, with the strongest growth we've seen anywhere, a staggering 15.97% CAGR.
Well, 16% in South Africa.
Incredible pace of adoption. This leapfrogging idea we touched on earlier, it seems to be in full effect here, doesn't it?
Absolutely. That leapfrogging effect is the perfect way to describe Africa's trajectory. The phenomenal growth, especially Nigeria and South Africa, with CGRs nearing 16%. It indicates that these newer markets, they're often able to adopt the latest digital tools without the burden, maybe, of legacy infrastructure, the kind that older, more established markets might face. This rapid integration of technology into their financial sectors is truly reshaping the global landscape of investment analysis. You're seeing a highly mobile-first population, a rapidly expanding middle class, growing confidence in digital platforms. This isn't just about catching up, it's about potentially innovating faster in some areas. It makes Africa a critical region to watch for future trends in fintech and investment analysis. Definitely.
So wrapping this all up, what does it mean for us, for you, the listener? We've seen a clear picture, right? A market experiencing robust growth worldwide, absolutely, but with some truly explosive pockets of adoption. From just under $1 billion in 2021, we're looking at nearly $3.9 billion by 2033. That's a massive expansion. And while every region is growing, Africa, the Middle East, and Asia Pacific are absolutely leading the charge in terms of growth rate, showing us where the most dynamic and innovative shifts are happening globally. It's a clear trend towards a more informed, more data-driven investment world.
If we just zoom out for that final big picture view, it's clear. The stock analysis software market isn't merely growing, it's profoundly evolving. It's fundamentally reshaping the way investors, analysts, everyone engages with financial data on a global scale. This pervasive adoption across such diverse economies, from the most developed to the fastest growing, it signals an irreversible global shift towards more accessible, data-driven decision-making. It means individuals and institutions alike are increasingly leveraging technology, not just as a convenience, but as a critical tool. A tool to gain an edge, understand risk better, and ultimately make more informed financial choices. It's making finance more democratic, more sophisticated, and frankly, more interesting globally.
Indeed. It really is fascinating to witness how technology is leveling the playing field for investors worldwide, providing tools that were once, exclusive to a select few. Thank you for joining us on this deep dive today. So here's a final thought for you. As stock analysis software becomes even more sophisticated, more powerful, more seamlessly integrated into our everyday financial lives, what new frontiers do you think will emerge? How will this continue to redefine what it means to be an informed investor in the years to come? We'll catch you next time.